Hello, this is Jordan. This video is being recorded on the evening of Monday, January 2nd, 2023. Thank you so much for joining me today. And as we get started, I would like to wish everyone out there a very happy new year and a very healthy and a very profitable 2023. And I think it's going to be potentially very profitable for gold and silver investors. And I'll get into that in other videos and commentaries over the days and weeks ahead. But in this video, I'm going to discuss the weekly outlook for gold and silver in the miners. And I'll try not to get too far ahead as I like to do. But starting things off here, we have the metals, gold at the top, silver at the bottom. This is a daily bar chart for both. And if we look at gold, and we got the 200-day moving average there for gold, which the slope of it is still sloping down, although I think it could possibly flatten out here in January. That's just a guess. And so the slope of moving averages is really important. What we love to see is a market or whatever you're looking at trending up, and it's holding above an upward sloping moving average. And so for gold here, the moving average, if you look at that, it's been sloping down since last summer. And so that, just looking at the direction of the moving average, that signals quite a bit of indecision. But I'm getting away from the very short term. But, what we're seeing here is a potential bullish consolidation for gold. And, looking at the daily bars, I don't think it's been able to close above 1830 or so. And so if we go back roughly 1 year ago, I remember 1835 was a really key level, and we've talked about 1840 being the 50% retracement. So gold is coming up on significant resistance. There's a lot to chew through here. You got 1835, 1840. In addition to that, you have 1870. That's where the upper red line is, and then you have 1900. So gold is not that far away from some really significant levels, which would be, I think, 1950 on a monthly basis, 1990 on a weekly basis. Those are some levels that I highlighted in my premium update. So it's not that far away, but there's quite a bit of resistance here to chew through. Again, you have 1835, 1840, then 1870 before you get to 1900. So we'll see. I mean, if gold is able to really pop higher here, then the targets would be 1840, but really 1870. I think if there's a little more push to the upside, 1870 is what we're looking at. And then for silver, look at the 200-day moving average there. Look at that circle. To me, that's what's more important. Is I want to see silver, if it's going to correct, come down and hold above that support around 2021, where the 200-day moving average is. Silver could come down, correct, test that for a couple months, whatever. Then eventually it rebounds, and then it's trending higher, back above a 200-day moving average, which is sloping higher. Then you have a real bull move. So I'm talking about the downside scenario. I mean, the upside scenario here, so silver closed right at 24. Intraday, it's been, trading. I mean, as you can see there to the right, intraday, it's been trading in the low 24s. If there's going to be one more pop higher, I think 26 would probably be the target for silver, 26 and 1870. Those are potential immediate targets if there's going to be one more pop higher. One more thing, if you look at the bottom there, that's the gold-silver ratio. The bottom right, you can see that's kind of stabilizing. So if we're going to get more weakness in the stock market, which I think is probably going to happen at some point, but maybe not at the beginning of the year because the S&P looks like it's holding 3,800 for now. But if the market loses 3,800 over the coming days and weeks, that's going to be better for gold versus silver. The gold-silver ratio should outperform, and silver will probably, its outperformance will slow down. You'll see gold outperform. So those are the things that I'm looking at. Now, looking at the miners here, we have GDX, GDXJ in the middle, SILJ at the bottom. And, SILJ trades more volume than SIL. I'm going to continue to make that point in all these videos, but I think it's important because sometimes you look at these ETFs and they just don't trade any volume. And so it's really hard to take any signals from a market that's not trading any volume. Now here I'm showing in blue, you have the 50-day moving averages. At the top for GDX, in that main chart, I can put in multiple moving averages. So I included the 200-day moving average there in red. The 200-day moving average, it's very similar for GDXJ and SILJ. The market is trading around it. It's sloping down a little bit. So we all know that. I mean, we know GDX 30, GDXJ to 37. Those are significant resistance levels, confluence of resistance, all that. But, here I want to bring in the 50-day moving averages. So again, that's in blue for GDX, GDXJ, and SILJ. And so, we can see that the miners are trading in bullish consolidations. These are potential bull flag patterns. So we'll see. I mean, there's a lot of things that can happen here. I mean, if you look at, I've drawn the lines there, which kind of show a triangle for the first two. And then the bottom one for SILJ, that's more of a rectangle. But by meaning there's a lot of things that can happen here. These miners, I mean, they could just continue this tight consolidation for another month or so. They don't have to break out this week or completely break down next week. So even, either way, if they consolidate bullishly but don't break out, or, they trade lower and then they rebound, there's all these scenarios here. So I'm just cautioning people there doesn't have to be an immediate signal here in the next week or even next 2 weeks. But, so far, based on the recent price action, I mean, this is starting to look more bullish just because the longer you consolidate in this tight of a fashion, you tend to get a resolution to the upside. And at the same time, the 50-day moving average, perhaps the miners could come down and test the blue lines in the 50-day moving averages. So looking at GDXJ, which I'm more keen on, 35.65, the 50 days at 33.59. So what would that be? I mean, that's, 6% downside or so to test the 50-day moving average. So it looks pretty similar in GDX. I mean, both of them are holding well above the 50-day for now. So that wouldn't be a bad thing if they come down and test the 50-day. So I could think of 2 or 3 different scenarios short term here, which I just talked about. I mean, medium, longer term, of course, I'm super bullish, not looking to trade in or out. But there's quite a bit of scenarios here in the short term. I think if the stock market, now remember, the miners have been following the stock market. They've both been trending together over the last several months. Now the miners are outperforming, so we like to see that. If the S&P is able to hold 3,800 as it's been doing, maybe it gets another pop to 4,000. Maybe in that scenario, the miners here will pop higher. If there's one more pop here, my upside target for GDXJ would be 42. There's more resistance there. And if you're looking at these consolidations, I mean, a potential measured upside target in the GDXJ from that consolidation, it comes to about 41, I think. So look, I never mean for these videos to drag on, but I think I've covered way too many scenarios here. We'll see what happens. I think it's going to be a great year. Very short term here, really hard to call. But I think it's going to be a really great year for precious metals, and look forward to producing a lot of content for you guys this year, and have some new things on the horizon that I'm looking forward to. All right. Thanks so much for tuning in, and I'll talk to you guys again in the next video.